Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's reports are jam-packed with potential trading opportunities that you do not want to miss. During the US session, we have the key PPI data and weekly jobless claims that will give us additional cues on inflation and the strength of the labor market. Make sure to mark 2:30 South African Standard Time on your calendar and keep an eye on these reports. But that's not all. We are also running a limited edition branded mug giveaway. Simply like this video and answer this question in the comment section. What is a lot? Is it A, the smallest trade size available, B, the biggest trade size available, or C, a trade size too big for trading? Don't forget to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. T's and C's apply.
Let's move on by having a look at what's making headlines within the financial markets today.
Let's dive into currency news. The dollar fell after data showed US consumer prices rose less than expected in March, raising expectations that the Fed is likely to stop hiking rates after a possible increase in May. The consumer price index climbed 0.1% last month, below economist expectation for a 0.2% gain, and down from a 0.4% increase in February. Excluding the volatile food and energy components, the core CPI increased 0.4% last month after rising 0.5% in February. Sticky rents continue to drive the core CPI. Economists at Goldman Sachs said after the data that they no longer expect the Fed to raise rates in June. Moving on to the analysis for today, let's take a look at the EURUSD. The fiber is currently hovering just below that primary resistance level at 1.1. If we break lower and close below that 1.098 level, we could potentially see a sell-off back down to retest the support level at 1.09. However, should we break through this resistance level and get a close above 1.102, we could experience a rally all the way to 1.11. In the stock market, US stock futures experienced a negative session among major indices as traders weighed recession risk following the latest meeting minutes from the Federal Reserve. The minutes from the FOMC meeting noted growing concerns of further financial turmoil ahead of corporate earnings season. Looking at the analysis on the S&P 500, the US 500 is currently bouncing on the bottom of that channel. Should we get a close above 4,105, we could potentially see a rally all the way back up to those high points at 4,150. However, if we break out of this channel, we could see a sell-off down to those lower levels at 4,000. Moving on to commodities. Oil prices rose 2% to their highest in more than a month as cooling US inflation data spurred hopes that the Federal Reserve is getting closer to ending its cycle of interest rate hikes. Brent crude settled up 2.01% at $87.33 a barrel, its highest since late January, while US WTI closed up 2.1% at $83.26 a barrel, its highest in 5 months. Now let's take a look at the analysis for crude oil today. This commodity rallied as expected yesterday and is now hovering just below that primary resistance level. Should we get a close below 82.7, we could see a sell-off to go retest that primary support level at $81 a barrel. However, should we break through this resistance level and get a close above 84.4, we could see a rally all the way up to $89 a barrel. Lastly, let's talk about gold. The yellow metal rose as softer than expected US inflation data spurred bets on an early rate hike pause by the Federal Reserve, while growing fears of a recession also supported safe haven buying. The yellow metal pushed further above the $2,000 mark this week and was now about $50 away from the 2020 record high. Looking at the analysis for gold today, the yellow metal is at a tricky level. Should we get a close above that 2020 level, we could potentially see a small rally back up to retest 2030. However, should we break below 2015, we could see it come back down to retest that diagonal support at 2009.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.